Chapter 3 Federal and State Income Tax Withholding. In the previous chapter, we had gone over calculating pay. In this chapter, we will determine the taxable income for tax withholding, as well as taxable income for Social Security tax and Medicare tax. Employers withhold money from the employee's paycheck. There are two categories of deductions that are withheld: mandatory deductions and voluntary deductions. Mandatory deductions are required, mandated by the government, for the purpose of collecting taxes. Voluntary deductions, on the other hand, are optional. They are requested by the employee. For example, 401k. This is a retirement savings plan that the employee chooses to contribute to this fund, and therefore it's deducted from the paycheck and is withheld by the employer and remitted to the financial institution. There are a number of mandatory deductions, the biggest being the federal income tax withholding. Question is, how does the employer know how much to withhold from each employee's paycheck? The answer is Form W-4. Employers provide to their employees the Form W-4 typically on the first day of hire. Information is filled out by the employee, provided to the employer, and with this information, the employer could calculate the amount of tax withholding. This amount of tax withholding is the employee's estimated income tax payment. Employees file the individual income tax return at the end of the year to determine the amount of tax liability, the individual's income tax liability. They compare to the amount of tax withholding, which is the estimated tax payment. If this withholding is more than the amount of tax liability, then they are due a refund. If it's not sufficient, it's less than the amount of tax liability, then the employee have to pay additional tax. State income tax withholding. State income tax varies very much between states. So for this class, we will assume that in our states, it will be 5%. This assumption is for simplicity. But we do know that some states have no taxes, no state income taxes. There are 9 of them, such as Florida, Texas, Wyoming, Washington, Tennessee, Alaska, and so forth. Local income tax withholding. This applies to some municipalities only. Social Security tax is another mandatory deduction. It's also known as OASDI. OA for old age, S for survivors, DI for disability insurance. Therefore, Social Security tax does not provide benefits to retirees only. It's also for survivors and for those that are disabled. The amount of tax withholding is 6.2% of income, taxable income that is, up to the amount of the threshold income. So any income exceeding the threshold income will not be subject to Social Security tax. Medicare tax, also known as hospital insurance. It covers health care for those over 65 years old and some disabled individuals. The amount of tax withholding is 1.45% of taxable income. Number 6, state disability insurance tax. This pertains to some states only, such as New York and New Jersey.